Hey
Got
Corey,
it.
how's it going today?
Good. Good afternoon, girls. How you doing?
So good. So good. Good to
That's
see you.
awesome. Pardon?
It's really good to see you.
Yeah, for sure. I gotta turn my volume up.
I can try to talk a little louder too. I don't
That's
get
good.
told very often. So Corey, why don't you tell us what you do?
Well, thanks for having me. Actually, I just want to get that out of the way first. I own a franchise for Dominion Lending Centers, mortgage broker owner. Dominion Lending Centers, actually,
Perfect.
Dominion Lending Centers is the largest mortgage brokerage in Canada. And we brought the franchise model into Saskatchewan back in 2008. So I guess this makes it my 16th year, and I'm
Wow,
a broker
congrats.
owner.
That's
Yeah,
huge. Yeah,
thank you.
that's
Yeah,
awesome.
thank you. It's gone so fast.
No kidding. I bet.
Yeah,
I bet. So
yeah.
one of the questions that we had for you today, or we wanted you to kind of share with us what you could, was what's going on with the Bank of Canada? Um, a lot of us don't understand all the changes. A lot of us want some clarification.
I don't know if Bank of Canada understands themselves, to be honest
Yeah.
with you. Well, you know what? It's a good question, but there's a lot of variables. But just to sort of give you some of the sort of the high level view on some of the stuff. It was very anticipated, so it was pretty humdrum stuff that the Bank of Canada didn't do anything with the prime lending rate right now. The market was sort of foreshadowing for some time that they were going to stay. There is a lot of sentiment out there that they thought that they would start lowering rates this year and possibly aggressively, but Tiff Macklem there, the governor of Bank of Canada, sort of set the tone that this is an election year in the US, and the numbers came out pretty strong in the US as far as employment and stuff like that. Inflation here in Canada, I don't mean to flip borders here, but inflation in Canada, they said, was still right around 3%. Their target rate is 2%. So they have, curbed it quite a bit, I guess, in that respect. I don't want to get into carbon tax and all that other stuff, but the quirky thing about their inflation numbers that is I guess for upsetting to the banking and mortgage brokering industry is that they actually take part of the cost of living, like the cost of mortgages, into their inflationary figures. And what happens when you increase prime this entire time? Anybody that's in a variable rate mortgage or has line of credit products, stuff like that, their payments go up. So it's kind of like sort of self-induced in some ways in that
No
respect.
kidding. I never thought of it
Yeah.
that way.
Well,
Mhm.
yeah. So, what are the two major things that happened to us last year in Canada? Carbon tax, and they kept increasing interest rates.
Yeah.
And their medication, I guess, if you will, was to keep increasing interest rates to get inflation down. But anyways, not to get too off track. The thing is that when the U.S. has strong numbers, and it's an election year, I think Bank of Canada's tone was sort of a cautionary one. So they weren't leaving the door open to any discounts anytime soon. But at the same time, they said, they don't want to really cause any more inflation, in the sense is that if they stop or start decreasing rates, they're worried about the prices of houses skyrocketing, right?
Absolutely. Yeah.
Because there's a lot of pent up energy, and they assume that, and listen, we're in Saskatchewan, right? So a lot of these terms and ideologies are dictated by, the bigger areas of Toronto and Vancouver, right? So they just don't want to create a bit of a spike in the interest, pardon me, in the real estate market as far as sale prices go.
Yeah. Makes sense.
So I guess to summarize and get back to your question is Bank of Canada did not move the retail, or pardon me, the prime lending rate. So the Canadian banks aren't adjusting their prime lending rate. Okay. So
Perfect.
like retail prime is around 7.25. So anybody that took variable rate mortgages during COVID and whatnot, they were getting like 1.45% off. At some of the bigger discounts, some were just 1%. So those people are still at 6.25 roughly, maybe tickling into the 6% range.
Okay.
So they're looking for some reprieve, right? They're looking for a break already on those mortgages. The other part too, like Malcolm says, if they do anything with prime and they start uh, inflation starts going the other way again, and they got to start increasing rates, that's a detriment to anybody that's in a variable rate mortgage or holding debt under a variable rate model.
Right. So I
So
guess what would you suggest to people that are in the market now?
well, it's going to sound biased, but I do have to explain something. You really need to connect with a mortgage broker because a lot of people are waiting on the fence and they're waiting for a discount on the rates. Now, the interesting thing is we're talking about the variable rate mortgage, okay? It can float up and down, but people have to realize there's the fixed bond rate. And given that the sentiments are that rates will eventually start coming down, and that since the Bank of Canada has maintained the status quo on the current rate that they've got going, the 5 year fix, the 5 year bond money has been sort of trickling down. So the 5 year money has come down considerably. Like, just a few months ago, I have to say it was pretty easy stealing from the major banks because people were getting their renewal notices in the mail and they were being quoted like 7.8% on a 5 year fix or something like that. Where, a mortgage broker like myself was still very much in the fives, like say a 5.89 or something like that. I
Mhm.
don't like quoting rate too much because video and time lapse and all that stuff like that. You know,
Absolutely.
but mathematically speaking, I can tell you right now with certainty, what are we today? January 26, 2024. You
Mhm.
can sort of do a survey of the banks yourself. They're still quoting people, even on some of their best stuff is around 5.69.
Mhm.
Okay.
Okay. Where the average mortgage broker could probably get you 5.14. Now, I am proud to say Dominion Lending Centers, because we are the largest franchise in Canada, we have tremendous buying power. Like we fund in the billions, not locally. Okay. I'm talking Canada wide collectively. And our discounts, like I'm seeing rates as low as 4.94, 4.99,
That's big.
so
That's a big difference.
Yeah, that's
well,
awesome.
yeah, so we're already below the market,
Yeah,
right? So if people are like, oh, if they would just come down a 0.5% more,
you're there.
um, we're already there,
Yeah.
right?
Mhm.
Okay.
We're already priced in.
Excellent.
You you know, um, if you want me to expand on that a little bit more, like I tell people, if we get into the spring fever market, and if you're waiting for rates to go down, think about something here. I don't know what what's do you guys know what your average price is in your market? Would you say
It's about 200,000.
200,000? Okay. So, you know, the problem is that we also have in Canada the stress test. Okay.
Mhm.
So when you're talking to a retail interest rate provider, a bank, okay, maybe they're quoting the client 5.89, 5.69. Okay. The rules of engagement are you have to add 2% to that for the stress test, the qualifying rate. So, people are loyal to their bank, but the bank is pushing 8%,
Mhm.
or very high 7% on their qualifying, until they talk to somebody like me. And if I can get them 4.99 and my 2% I'm at 6.99, I can afford them a lot more house, right?
Mhm.
Because there's no other way to say it. The bank's rates are so high on the street, the retail interest rates are so high, they're actually stealing your buying power,
Mhm.
Yeah.
right?
Yeah.
They're sacrificing your ability to go and afford, say, a $225,000 house, and telling you that they'll only back you on a $200,000 house because they're qualifying you at such a higher rate,
Yeah.
Yeah.
right?
Yeah. We've seen
So
that here quite a
Yeah.
bit actually in the last little while.
yeah.
Sure.
So, the thing is that either you can come to somebody like myself and you can get a much better rate and still afford the same house, but at least you've got a much better interest rate on it,
Mhm.
or, for those people that keep getting beat out, they're looking at a $200,000 house, but that 210, 215, would get them into the right house. It could be the interest rate that's holding them back,
Yeah.
Makes Makes
from
sense.
their buying power. Yeah.
So you would suggest people that are new coming into the market or people that are looking at selling or refinancing or whatever to try to find a mortgage broker like yourself first,
Yeah.
and
Yeah.
kind of see where they're sitting and then make some good decisions from there.
Yeah, like I was. one of the first, and I'm talking two people back in 96 that brought modern day mortgage brokering into the province. There was only two of us that I knew of in Saskatoon. People still, it's like even Canada wide, statistically speaking, I think we'd be lucky if 50% of the people in Canada use a mortgage broker. But I mean, that's huge. It's gone from 25, 30, 35%, 40%. Um, and I'm not being biased. The truth of the matter is that people are paying for the branch experience, you know. So there's people that tell me, I'm in Saskatoon, so 8th Street's the major commerce street here, right? People tell me, I don't care if it's a Sunday night at 10 o'clock at night, I got to be able to pull into a parking lot and touch a brick. I'm like, okay, well, you're going to pay for that branch experience. Now in Saskatoon, if I'm talking to somebody that's being quoted 569 and I can get them 499, I guess I'm throwing rates around quite a bit, but it's the math that I'm after here, right? 70 basis points on 400,000 just in a freeze frame picture. 7 times 4 is 28. That's $2,800 a year.
Yeah, that's huge.
Really?
It's huge.
Really?
Yeah.
You really want to get out and touch a brick? You know what I mean?
Yeah.
My paycheck goes there. Well, what's your
It can still
convenience
go
worth?
there. It can still
Yeah.
go there.
Oh,
You just
yeah.
get more of it.
Yeah.
Yeah, like $2,800 a year per year in a 5-year fix. I mean, prorate that out over 5 years. Now it's on a declining mortgage balance every year, so it wouldn't be $2,800 every year.
Right.
But,
Or similar,
it's
right? Yeah.
well, for sure. Even 2 times 5 is 10. That's $10,000.
Yeah. That's huge. It's huge.
The thing is too is like that I do try and tell people they're waiting. Oh, if rates just come down another half. So again, reach out to a mortgage broker because they're already well below the market already, right? They probably have that interest rate that you wish you could have got. Because here's the flip side of that. Okay. If you're saving 0.5%, let's go back to your $200,000 that you were telling me there. 0.5% on 200 grand is $1,000, right? Per year in interest. So over a 5-year period, you're talking 5 grand. Okay. So what happens if rates go down a half? And then that gets all these people into the market, and now you're in competing offers, and now you end up having to write a $215,000 offer to purchase contract on that house. What did you do?
Yeah.
You went, right? Get the house for 2 and save a half a point now, or overpay for the place, if you get into a competing offer situation and you end up having to write for 210, 215. What did you wait for?
Exactly. Yeah. Yeah.
Right. So the beauty of what I do is the math doesn't lie. We just follow the math
Yeah.
for the most part.
So Corey, you had touched on this a little bit too about people being, loyal to their banks, but just a quick overview of how easy is it to switch when you go to renew your mortgage?
That's a great question
for the clients.
Yeah, it's very easy. It's still a formal application. We still need a credit application. Name, date of birth, SIN numbers, where do you live, where do you work. We got to verify employment. We're getting job letters and pay stubs and T4s and stuff like that. But we try to not make it a make work project. But I mean, your homework assignment is get me a job letter, a couple of pay stubs. If your T4 is out already, grab me that current mortgage balance statement. But the important thing is not to do it under duress, right? Like I've got a database in the thousands. I've been doing this a long time, so my database is getting 6 months, 100 days advance notice on their renewal dates. People cannot fall asleep on a renewal because then you're panic stricken. If you wait for a week or 2 weeks before you're coming up for renewal, you're going to set in an open term if you're going to get that mortgage moved. And I'll tell you, an open term is 9%. Now, 9%, you got to take that into perspective here. That's per annum. So if you sat in an open term for a couple of weeks at 9%, you're going to cost yourself a few $100 more than you should have. But pre-approvals up for renewal, you need to be 90 to 120 days ahead of the curve so that somebody like myself can properly assess your situation. And again, mortgage broker, just by definition, means that we have a plethora of lenders that we can go to, and we are fed rate sales and rate opportunities by lenders daily, weekly. You know, I might start someplace 120 days today, but as I'm zeroing in, we're getting closer to the date of possession or getting to the date of actual being switched out. Maybe I moved lenders 3 times because somebody kept putting out a better promotion. You know,
So as a broker,
people,
you can be super competitive. That's what you're
well,
saying, right? Because
and
you have access to so many different lenders.
we're fluid. We're
Yeah.
fluid. Okay. I'm not loyal to a bank. See,
No.
and ask me what my biggest pet peeve in this whole business is, and I'm pointing, I'm sorry, is, 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 is mortgage reps with the banks masquerading as mortgage brokers or not correcting real estate agents and the populace of people saying they're mortgage brokers. You are not a mortgage broker. You are not educated. You are not licensed. You are not me.
Yeah.
I've got the credentials. I'm a mortgage broker. You're a bank rep. You know, it's like, do you go to Tim Hortons and do they broker your coffee out? Like, do you pull up to a Tim Hortons window and say, what's the best price on Starbucks and McCafe today? No, they give you a cup of Tim Hortons coffee, right? You know, you go to any of the brand name banks, and I'm being very cautious not to mention any brand name banks here, but they're a one trick pony. Like you are getting their product and you are getting whatever their menu says behind them, that's what you're ordering and that's what their interest rate is, right? You know, so that's the other thing when you're using a mortgage broker, it's not only the knowledge and the experience that we bring. We have 30, 40 different lenders policies behind us that, oh, okay, you know what, this is perfect for you over here. Okay, you've got a suite in your place, a legal suite or whatever, or you want to buy a home with a legal suite. Okay, well, those lenders over there, they're not the greatest to deal with because these lenders over here will follow a different set of rules, you know, as far as rental offsets and things like that.
Yeah.
You know,
So it's custom
but
products built for your clients.
it really is. You know, a lot of people, they go to the bank and sadly, you know, you can't save everybody and you can't reach out to everybody, but they get turned down by their bank and they're convinced by their bank, oh, you're not qualifiable. You know, I've had many success stories. You know, it's the real estate agents that won't give up on a client either, right? Okay, we did it your way. You went to your favorite little banker there. We're done with that. You're gonna go talk to somebody like, you know, like Corey Klassen or whatever. You know,
Yeah.
I've basically got the reputation, and there's other mortgage brokers out there like me. You know, if we can't get it done, then nobody can. But at least if we can't get it done today, then we'll put some steps for you. Maybe it's 30, 60, 90 days from now that will make, you know, we just got to tweak a couple of things, right?
Yeah, you'll work with them as far as budgeting and saving and let them know what they have
Yeah,
to do in order to get approved.
for
Yeah,
sure.
I
Yeah.
think Roxanne and I have both had situations where we've had clients, you know, declined and we're like, okay, well, moving on. Let's like, we're not giving up. We're gonna move on to the
Yeah.
next one and eventually we get it done, as long as it's in the client's best interest, of course.
Well, I know even
Well, yeah,
personally for ourselves, when we moved from Northern Alberta to Saskatchewan, when we bought in the Battlefords, we used a broker and it was
yeah,
an amazing experience because same thing. We were going with this institution, then this institution, and then this institution came in with a super rate. And so
yeah.
yeah, it was awesome. It was awesome.
Well, the thing is with dealing with a mortgage broker, we're really vested in our clients. Like we're building a book of business, and you know, we live, eat, and breathe and sleep interest rates, the market, being on top of all the bank's products. You know, you walk into a bank and you very rarely see the same faces. You know, people make an appointment, they phone a 1-800 number, they wait for a week for the bank to get them. I've already got them approved within the first 24 hours. I can pre-qualify somebody over the phone in 10, 15 minutes just after talking to them. You
Yeah.
know, right? And when you have a question, 9 times out of 10, the banks, they circulate staff through. They train them in positions and they move them and they move them and they move them. You never get a relationship, you know, versus me as a mortgage broker. I mean, you know, it's a close call between friendship and client, right? You know,
Yeah, you
where
don't know what
I
to
was
call
just,
them.
well, truth be
Weird
told,
to call a client. Yeah.
yeah, like I'm playing hockey with my clients, I'm playing
Yeah.
pickleball with my clients, I'm chumming, you know, we just check in,
Yeah, that's right.
it's a relationship, right?
Mhm.
Yeah.
And for somebody like myself, for the life of the mortgage, as long as my client needs a mortgage and they're always coming up for renewal or refinancing or upgrading or whatever it is, I'm a legacy mortgage broker. And what I mean by that is I was doing mortgages for people that were 25 years old, and now I'm doing mortgages for their kids that are 25.
Yeah.
Their parents are in the 50s, and I'm doing their mortgages for their kids.
That's
you know,
awesome.
Yeah.
or-
Which
Yeah.
is great. That's great for business.
Yeah.
It's great for
Maybe
people
good.
too.
Take care of
Right?
people,
Yeah.
and they're going to trust you with their kids.
Well, the point is we're always here, right? We're,
Yeah.
we're it's a book of business that we're building,
Yeah.
not just a number. It's not like the Tim Hortons drive-through to go back through that again. You're not just a number.
Yeah.
You're not just an
Mhm.
account number.
Yeah.
Yeah.
A name and a face.
Awesome.
Well, that's really good. Thank you so much. This has been a ton of information. I'm really hoping we can help clients too.
Yeah, it was fun. Thank you so much. I really appreciated the invite.
Yeah.
Thanks for coming.
Yeah, we'll
Yeah.
definitely be in touch in the near future.
Yeah, let's do this again soon.
Sounds good. Thanks,
Agreed.
Corey.
Bye.
Okay, take care.
You bet.
Bye-bye.
You too. Bye bye.
Goodbye.